there, not Irving, the rock group, yes. Sometimes got to clarify these things, don't you know? It's 8:42 now.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
You really should do that. That's why we sit down with Philip Statler from Statler Financial Services in downtown Sebring every morning about this time, or at least every morning we can get together. He's on the line right now. Philip, good morning. How's life this morning?
Hey, good morning. Doing well today, Dave. A little out of sorts. It's one of those days where I'm running behind. You know how that feels some days, right?
Oh, boy, do I. Understood completely. Set the table for us with yesterday's performance down the line, and I'm just going to bet, because the chip stocks recovered yesterday, I'm going to bet a nickel that the chip stocks are selling off this morning because we're starting to get a cycle going. Dow ended up closing up 385 points yesterday. That's 0.75%. S&P had an even better percentage gain, up $66. That's almost 0.9. NASDAQ had a party. They were up 1.29%, 329 points up. And Russell 2000, giving you an indication there was a pretty broad-based growth, up a full 1.5% yesterday. And my tip sheets are saying a good chunk of it is recovery of the chip company trade, and that kind of got led in by something we'll get to when we get to the interim reports from the companies that are reporting. But I really have no idea whatsoever why we bought everything that wasn't nailed down yesterday. Do you?
Yeah, and you're right. The indication, especially if you look at the NASDAQ 100, Dave, it was up, man, getting close to 2% yesterday, 1.93. So it was a good day yesterday. I wish I could tell you it looks like we're going to follow through this morning, but it looks like people are taking profits this morning.
I'm starting to get the feeling that these big fund guys are starting to act like day traders. The chips go up, and then they buy them when they're low, and that brings them up for a day, and then they quick take their profits and run, because it's almost becoming a 24 to 48 hour cycle for the chip stocks. The same problems in the industry exist, the same problems as far as capital expenditures on the companies that everybody's concerned about still exist. But then, we go up and then we go back down again. It's starting to look like we're getting some wholesale day trading going on from the big funds.
Well, I get it could be. I mean, it's just some big movements in the marketplace as a whole, which is, I don't know. Usually you see a little track record for a while one way and then the other way, but right now it's like you said, 24, 48 hours, and then we switch directions. 28, 48 hours, we switch directions. So it's kind of a back and forth deal right now.
It really and truly is, and it's downright confusing because, like you say, normally you see a trend. Okay, chip stocks are under duress. There's a trend downward on them. Oh, wait, we're making a solid U-turn. It really, really, really is hard to figure out. Not much going on as far as data dump is concerned this morning. We'd mentioned earlier in the week that mortgage rates had ticked up again. I think on Monday I quoted the average 30-year mortgage rate up to 6.51%, and you mentioned that you saw another uptick on it today. What the Sam Hill are we doing buying an increase up in mortgage starts? They actually increased last week, didn't they?
They did. They're almost up to 6.7%. Not quite, but I mean, a hundredth of a percent will be there. But you're right. I don't have the number for refinances. I'm assuming they've probably dropped some. But the application for mortgages to purchase a new home rose by 6% for the week.
And that's good news for the housing industry, obviously. Slow day, relatively speaking, as far as reports are concerned. At the end of the day today, we're going to end up getting Alphabet, Google's parent company, and Tesla, a couple of the Magnificent Seven glamour stocks. Some of my columnists keep talking about how we need to dump the Magnificent Seven as being one of our stock reading. And given the way things are going, with the way they're penalizing these companies every time they report a capital expenditure increase, probably might not be a bad idea, but we're going to hear a couple of big guns later on today. Let's see. Oh, tidbit. This one really made me sit up and take notice. 1/3 of investors out there today have more credit card debt than retirement savings. Now, in your line of
Ooh,
work, that's got to be a scary thought.
that's definitely a scary thought. Man, to think that a third of the folks out there have more in credit card debt than they got in retirement savings. That's just a dangerous statistic, Dave.
Absolutely. It made me sit up and take notice of that. Let's see, other things going on. The 10% blanket tariffs that President Trump instituted when he got slapped down for all his up and down tariff policies, they're going to expire soon, but then we yesterday decided to announce a pile of tariffs on Canada for a bunch of Canadian goods, so we can pretty much expect any reason we can think of to add some tariff dollars on in a hurry, can't you?
Yeah, it seems like it. It's yeah, and then who knows where the next one will come, right? We've got, and then the other thing, Dave, is really setting us off right now is I saw that we have I want to say striking, but that's not quite the right word. We have initiated attacks on Iran the last 11 days, 11 days in a row. We have had some
Mm-hmm.
kind of attack on Iran. So that's kind of, well, you can see it in the oil price, right?
Oh, without a doubt. Yeah, you're not going to like the oil prices when we get to those this morning. I did note this morning, as I keep seeing headlines about Europe is suffering because their price of crude is up over $90. It's up way over $90. The Brent crude, that's the North Sea crude that Europe depends on most for domestic supply, $94.33 a barrel this morning. That's even a bigger differential between our New York price and the normal price of Brent. We're talking, let me see, about $8.50 a barrel difference between the two price levels. That's a bigger spread than usual. So Europe is starting to bid their price of oil up through the ceiling again now.
Yeah, well, it is, and then on another front, interest rates are going up. Well, obviously the mortgage right kind of indicated that, but the government 30-year treasuries back up to 5.14%. Now, I think the highest I've seen it in the last year is about 5.2. So, but we're heading back in that direction right now.
Yeah, and we talk about these being quote unquote more normalized rates, but now with the acceleration in home values over the last 10 years, while our interest rates were down around 0.25% on the federal funds rate, it's making mortgages, even for what was not a particularly impressively high mortgage rate, really expensive now. 6.5% mortgages didn't sound too bad 20 years ago, did they?
No, it didn't. I mean, I can remember when that was, that was the norm, right?
Yeah, but now the value of the house you're buying is 2.5 times what it was 20 years ago, and you're going, that's enough to make one choke. Quiet day as far as reports are concerned, but you got some preliminary information out of Super Micro, which we've always had a lot of interesting news on lately anyway. I was kiddling it before we started saying it'll be an interesting report since half their executives are heading for jail.
Well, they had a good quarter, at least a preliminary report. This is not their final earnings call, but fourth quarter results were much stronger and more profitable than investors had expected with some of the numbers they threw out there. And so they're trading up today, right now, 12%. And with that little bump that they're getting, it's kind of bleeding over to Dell and Hewlett Packard this morning.
Uh-oh.
Yeah.
Sector difficulties. Gosh, do you think that must mean the chip prices are going to fall again today? What do you think?
Yeah, we'll see what happens with that. Another big thing coming out, Cal-Maine Foods. They're one of the big egg producers out there. They came in and really shocked the market with a loss. They lost 76 cents a share. They were supposed to make a profit of 8 cents a share. So that's a pretty big swing there for them. They were trading down 4.5. They're down 6.8 now.
What the heck caused it? Did they put any kind of interest on it?
They didn't say. Well, they blame the price of eggs. They well, they say they were historically low, which is hard for me to believe. But then it says inflation, adjusted for inflation is historically low.
Okay.
Yeah, it's like, okay, come on,
So
people.
I was going to say we got scared during the bird flu crisis when the eggs actually did go through the roof, and now and in truth, they are kind of back down to where they were before the bird flu epidemic. So we haven't thought about eggs all that much lately, have we?
No, we haven't. I got two more for you, Dave. AT&T reported they had mixed results. They missed on revenue, but they beat on earnings per share, and so they're trading up 4.6%. And then the CME group, that is the futures. That's that group over there that you can pretty much buy any kind of contract you want over there in the CME group.
It's also the cattle and bean markets up in
That's
Chicago.
Right. Yep. So they did better than expected for the second quarter. So they're up about 1.1%.
All righty. Class is in session, sir. You got a tip to help people get toward retirement more productively this morning?
We do. As we look at Risk-Wise Wednesday, we want to think about diversification. And one of the things that I look at and tell people is, look, there's two areas of diversification that people need to look at. The first is it's a bigger picture. How much of your investments are at risk in the market, and how much of your investments are principal protected? They can't lose any value at all, no matter what happens in the market. That's your first area of diversification. And that should be based a lot on your age. The older we are, the more we should have in the protected bucket, the less we should have in the risk bucket. Now, once you get past that level, then we need to diversify even more within the risk bucket, depending upon whether you're a conservative investor. And I have retirees that are still out there in the moderate and aggressive, not that they should be. But so you have to look at that overall. But if you get the first diversification right, the second one, you can take a little bit more risk on. So, just be cognizant of how diversified you are on multiple levels, Dave.
And given the fact that the market has been herky-jerky, that advice has been very well taken. Resetting the table of the morning, yesterday was an up day on all the major indexes, some of them irrationally high for that matter. 45 minutes before we open this morning, what are we looking at?
Some of the indexes, everything is red, Dave. I will give you that. But some of them are starting to look a little better than what we had earlier. The S&P, the Dow 30 is basically down 0.1% right now. The S&P 500 is down about 0.4. The NASDAQ 100 is down 1%, and the Russell 2000 is down about 0.5%. On the other side of the coin, we're seeing a little bit of a bounce. Silver's up 0.75%, and gold's up 1.1%. Crude oil up almost 2.9%. I will say, Dave, it's $86.75 a barrel, which is high. But when I first looked at it this morning, it was $89 a barrel for our West Texas crude. And so it slid a little bit this morning.
Yeah, the overnight futures have seen some peaks. We were bumping our nose $3 or $4 higher than the morning price the other day as well. Glad it doesn't stay that high, at least so far. Yes. Looking across the ponds, the Asian Rim was overall unimpressed. The Chinese mainland markets on balance down by a little over a full percent at the 6 a.m. close. Everybody was in red ink overall. Europe is a little bit better humor this morning than the Asian Rim is. Most of the European indexes are up. The average European index halfway through their trading day up by, call it about 0.2% if I do a smoothed average. Not a bad start in Europe given the fact that Asia's been hurting. Getting my retirement together to make sure I actually can retire takes a plan. That's what we talk about every morning here. How do I get a hold of you to be able to get something specific for my needs?
Devin, give us a call at 382-0037. We'd love to sit down with them, talk about our core retirement design where we can help them design that retirement they always dreamed of. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
All right, and we will be back here tomorrow morning to fill you in as to what's going on. You, sir, I will catch shortly. Have a good one, all right?
All right, buddy. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, I want to thank you for joining me today. You won't see me for a little while, taking a little hiatus for about 3 weeks or so. And so I will be back here around the 20th of August. You guys enjoy the end of summer and the beginning of school, and I will see you then. Take care. Have a great one. Bye now.